Welcome back, everyone, to the BizBeat by SVA, the show where we break down what business owners need to know about tax, finance, and business strategy. I am Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, joined as always by Eric Trost, our tax partner, and also our firm's president. Eric, how's it going? You staying warm out there?
Yeah, it's going great. It's easy to stay warm when you're in an office, Lee.
Fair enough, but you do travel to your office from your home. That's, I guess, what I'm inquiring about. Are you getting there safely?
Yes, I am. In spite of the weather and the troubles, I do get here safely.
That makes me feel good. That I was very nervous about your commute in this morning. All right,
you bring that up, and I do now tend to wait up for when the daughter gets home. When she's out with friends and it's like this, you don't think about it, but yeah, as you're sitting there, it's like, I'll just wait up and make sure she gets home okay.
Yeah, no kidding. I got in 8 days, I'm going to have a driver in the household. So I'm starting to think about that stuff too. It's a little scary to think about, especially with the roads the way they are right now. All right, this is really not the focus of the podcast today though, Eric, is it? We got lots of other fun stuff to talk about. Before we jump into our main topics, we've been talking a lot about OBA over the last, how long has it been, Eric? I don't know, 7 to 8 months.
Signed July 4th, remember?
Yeah, signed July 4th, but man, we were talking about it. Well, it was still just an idea in Trump's head, and but a lot of other things to talk about too. So yes, we have our landing page, sva.com/OBA, OBBBA. But there's a lot of other information we have out there on our website, just at sva.com, industry-specific information, upcoming webinars, all sorts of fun stuff. So please go there for any up-to-date information you're looking for. But Eric, let's talk a little bit and jump into one of our main topics today, which is Trump accounts. We've talked a little bit about what these were going to look like, but these have taken a little bit more shape. There's been a couple of big updates here. You want to update our listeners on what's changed in just the last couple of weeks?
Yeah, there's a couple of news stories out on the Trump accounts, and there's some IRS guidance. Let's start with a big news story on it. Michael Dell of, what is it, Dell Computers? Is that what his company's called?
Maybe it's Dell Computers. I don't know. It's one or the other.
Yeah, and so Michael Dell, I think he's related to the name Dell Computers. Anyway, he is donating $6.25 billion into the fund for Trump accounts. And so we'll get to more about what Trump accounts are. But that's a fairly sizable donation. That's $6.25 billion. And the first time I read it, it's like, $6 billion. And then I saw it was 6.25. And it's like, well, what's $2.5 billion? That's a rounding error, right? Well, that's $250 million that 0.25 represents. So to some people, that's real money, $250 million. Anyway, so he is donating that to the Trump accounts. It's a significantly generous donation. I think it also is somewhat reflective on the kind of wealth that capitalism can create. Now, where it all ends up, I think, is always that matter for debate. But the creation of that wealth, this is certainly evidence of that.
No kidding.
So if you haven't read the story, I think it's fascinating just that someone's accumulated that and they're willing to give it away. If you haven't read the story, it's easy to search up. If you look at Dell contribution and Trump accounts, I encourage you to do so just to take a look at it and see the details. There's also some IRS releases on the Trump accounts. So let's recap what those Trump accounts are. They're accounts that you can set up for kids under 18, and you can put money in those accounts, and those accounts then will grow tax-free. And at the age of 18, they basically turn into an IRA for the kid. And so they continue to grow tax-free, and then the kid can take them out either when they're 59 and a half, which is when you can start taking these out normally, or you can take them out before then with limited exceptions and pay income tax on it, but not pay a penalty on it. If you take it out before then without having any good exception for it, you pay income tax and you pay penalties. So you generally don't want to do that. That's how an IRA account operates, is it's incentivized that it is a long-term hold strategy. So they have penalties for taking it out early. But again, there are those exceptions you can take it out for. For example, first-time home buyer, you can take it out for that. Now, normally to set up these kind of accounts, if you're setting up an IRA account for your kid, they have to have earned income. So it's sometimes hard to get your kid earned income. I mean, when they're 3, how much can a 3-year-old actually earn? So it's difficult to get an IRA set up for them. With a Trump account, they don't need earned income. You just can contribute to that account. And there's various sources that can contribute to that account, including yourself, related persons, your employer. So there's different ways that money can get in there. There's a cap on how much you can put in per year. And after that cap, that's it. You can only put that amount in per year. But next year opens a new cap. So you can do $5,000 a year. Starting in 2025, any babies born in 25 through 28, they get an automatic $1,000 funding from the government. So the government's going to put $1,000 in there to get their account started. Again, you can't take it out till they're 18, so you can't just go and grab it. But it sits there till they're 18 and then takes on those IRA rules we talked about. So it's a way that you can start these accounts going. It's a way that the government does a seed in there. And that's starting as soon as they get this program rolling, which these rules are now starting to define. Trump accounts won't be formed until July of 2026. So July of next year is when those Trump accounts form or can be formed. So at that time, expect that this $1,000 contribution now, if you had a baby born between 25 or through 26 and then 27, 28, expect that that's going to also come with that $1,000 bonus.
Right. And Eric, I guess part of the idea here is like, well, if you're anything like me, you started work in your early 20s. You don't contribute to a 401k because you're a dumb 20-year-old, right? And then you sort of like by your 30s, you're like, oh, maybe I should do this. And then all of a sudden you're 40 and you look back and you're like, oh, now you understand how interest and compounding and time value of money and all this stuff. And you look back and you think, had I just done this in my 20s, I would have so much more money now. And now, instead of starting in your 20s, kids can start from almost the time they're still in the crib.
Yeah. So, and the power of compounding, that's what you're talking about right now, and how money grows over time. Certainly in your 20s, most of us don't have those kind of starter kits. And so when we're 20s, maybe we're putting into there. That's also sometimes a time of short-term thinking. Would you rather, contribute max to your 401k or have beer money for Friday night? And so sometimes the beer money wins, and so the 401k account loses. But any financial advisor would tell you, do the sacrifice now, put the money in, because the growth that occurs over time and tax-free growth in these kind of accounts is significant. And this is how, you talk about how millionaires are made. This is one of the ways that millionaires are made, starts with a savings account that accumulates and builds up over time, and you don't dip into it. That's how wealth creation happens.
Absolutely. So, well, thanks for bringing our listeners up to speed on that investment from Michael Dell sounds like a game changer. It's nice that's coming from a private source as well. So I'm sure that makes everybody happy. But Eric, another topic, we've talked a lot about Trump accounts. There's always new information coming out. Same thing as it relates to tariffs. We've talked about tariffs a lot on the podcast. What business owners need to prepare for and how they can be ready and how they, need to be able to pivot if things change. But there are a couple of things out there right now that are worth talking about as it relates to tariffs. Let's maybe start with something that the White House has dangled out there a little bit, and that is potential rebates on funds collected via tariffs. You want to talk about that?
Yeah. And so when you say the White House, I think you specifically mean Trump, because he dangles things all over the place from time to time. And he has been now touting a tariff rebate. So a rebate to families of $2,000 per family funded by the tariff revenue. This is, we call it an early stage idea. Sometimes when Trump puts these out there, it's the formation of the plan, and it's a couple sentences. Many details would still have to be worked out. It is likely to be income tested if it does even come to fruition. So it'll be for those that, are under certain income limits. And then the question is, will it be taxable or not? All those things have to be worked out. But I would expect when Trump gets something like this in his mind, that some way, shape, or form, it comes out there. So I would expect we're going to hear more about this. And sometime in 2026, there might be that tariff rebate that Trump has been, I want to say tweeting, but he really goes on True Social now first.
Right.
And then people repeat him on X, which is, I don't know what an X is called again, an Xer. I still call it a tweet because I don't know what else to call it.
You're right. I don't know what it's called. I think you're right. I think people still call it a tweet, but then again, nobody's really on board with X. But that's fine. So that's one side of things. That's
what are you talking about? It's the biggest social media product out there now.
I know nobody knows what to call it still. It's interesting, but I've still, it's been a while, and everyone's like, X, formerly known as Twitter. It's like, all right, well, at some point we get past it. But anyway, so that's one side of the tariff conversation. But Eric, the other side is that this was argued recently at the Supreme Court, and there could be a decision coming here. What might that look like?
Yeah. So normally when tariffs get put into place, there's some kind of congressional approval or action that goes along with the tariff. That's been standard practice. Trump has taken this to a point where I think his administration himself believes that there's a way that he can single-handedly move these tariffs around. He doesn't need any congressional or Senate approval for these. One day he can come out and say, hey, China, that's a 130% tariff. And then 3 months later, he can renegotiate it and say, okay, China, it's a 30% tariff now. Same with Canada, same with Mexico. And he's doing that under a provision within the law that he believes allows him to single-handedly do that. And that's what's being challenged right now. So a number of business groups have gotten together, and some government entities have gotten together and said, hey, you shouldn't be able to do this. This act that you're doing the tariff maneuvering under actually does not give you the power to single-handedly make all these tariffs. For Trump, it's a tool that, it's his toolbox, and he can go in at any time and ratchet rates up or down. Not just even for trade purposes, it might be for, to stop the flow of illegal drugs. And then, so he's going to use tariffs as a punishment against a country for that. Or he doesn't like some kind of political position maybe that foreign country is taking. He can use tariffs against them. So he really sees this as a tool in his tool belt to pull out any time, as opposed to some kind of long-term policy making. And so what that means is, if Trump's going to use it that way, I think he rightfully has to have the decision to move these up or down quickly, because then that's how he negotiates with them. If it turns out that under the act that he cannot do this, and that's what the Supreme Court's going to decide, then a lot of these tariffs become illegal. Now, what happens to all the past tariffs that folks have paid?
Right.
I don't know. Right. Well, if these are declared illegal, aren't they illegal from day one? So do you have to go back, and do you have to do a bunch of rebates for tariffs that have been paid? That probably kicks, by the way, Trump's rebate program that we just talked about to the curb. If all that money has to be rebated back to those that were paying it in, and then is there some limited power Trump has, or is it really everything has to go through Congress? Because that would totally change the way that Trump is currently using tariffs for a negotiation tool, because he's not going to be able to go and get congressional movement as quick as now. He doesn't need it, according to him, and so he can just do this on the fly. So it's going to take that off the table. Does Trump try to come in then and do something different, like charge a market access fee for companies that want to come to the U.S. and do business there? And can he do that single-handedly, or can he get something passed on that? So he may try to come about it a different way. But this is kind of a we shall see, because this is a big decision that the Supreme Court's looking at. They heard the arguments in November. They might still be talking about it now or getting, follow-up questions answered, but decision's expected probably by the end of January. We should know this one. So middle of December now. Wouldn't be surprised if we have this by the end of January. Of course, we'll put it out on all our media and our podcasts when we hear this. But it will be big news. You won't need to wait for us. This will be big news and make the papers.
Right. And Eric, if you're one of those businesses that's been highly affected by tariffs, this is something you're paying super, super close attention to, because this could be, this could affect you in a lot of different ways.
Yeah. I was talking to a client the other day, and they were at an investment presentation from a company that invests in a number of different companies. So this company that invests in another bunch of different companies, it's like a PE firm, a mini PE firm. They do a quarterly update for their investors. And in the quarterly update, they've added onto their quarterly update the tariff impact, low, medium, high. And so the reason they're doing that now is it's now another factor they have to take into concern within their investment portfolio. So it's risen to a level that it's garnered a lot of attention, that you've got investment companies now saying, hey, is your company, a tariff risk or not? That wasn't so much a question if you go back pre-Trump. Now it is a question, and particularly because the rules change so quickly. So it's one thing to know what the tariff is and say, okay, wow, China, you've got the 130% tariff, and it's like that all the time, and now we have to adjust. It's another thing to say, how can we adjust if you've got 130% in day one, and then 10 days later it's 30%? And that's a huge swing in what you're getting from there. So I think what Trump is doing by single-handedly acting quickly that way does put a lot of question marks into the business community as far as planning with respect to tariffs. And that's why, there's tariff risk out there. It's the risk is more the unknown. Okay. Once you know it and can plan for it, that's one thing, but this is the unknown, because you could be paying twice as much in a tariff one day, and then your competitor is paying half as much because, they just waited a week.
Right. No, absolutely. I think that's been the number one complaint from the get-go, and that is business owners want to have the right information so they can plan for the future. And that's what's been hard for them. We understand what he's trying to accomplish. Lots more to talk about there, Eric. We will talk more as the decision comes down for sure, and as or if the tariff rebates start to take shape. But let's move on to the mailbag. So listeners, you can send us your questions at bizbeat@sva.com or on our website at sva.com/bizbeat. So Eric, this week's question is about audits. We don't talk a ton about audits, but this week's question is, my lender is requiring an audit. What do I need to do to prepare for a first-time financial statement audit?
Right. And so this question is referring to a financial statement audit, which is totally different than an IRS audit. So IRS audit, they're coming in, looking at your tax return, checking your positions and receipts and all that other stuff. This is a financial statement audit, and that's something totally different. Financial statement audits are performed by accounting firms such as ours. And really what they do is they're meant to offer a level of assurance that the financial statements are fairly stated within the given set of rules that essentially we've all agreed to as accountants on how to prepare a financial statement. So within this set of rules, it makes it try to level the playing field so that when you look at one statement versus another statement, that the statements are offering comparable data because they're prepared under comparable rules. A financial statement audit, the audit part of it is, hey, we are expressing an opinion that these financial statements are reported in accordance with those rules. There's different levels of financial statement opinions. One of those opinions is an audit. That's the strongest opinion you can get. A level down for that is something called a review, which gives a lesser opinion, but also still an opinion within that financial statement. When you're preparing for an audit, one of the things you should do is involve your accountant up front on, hey, this is what my bank's requiring. Sometimes the banks require this to check a box. Sometimes, okay, we're not going to be able to get around this. Sometimes you can talk to your bank, though, with your accountant and say, hey, what are you most concerned about? And should we look at something more specific than an audit? And the reason you want to do that is You want to get to what the bank finds most valuable. You don't necessarily want to pay for a full-scale audit if they'll find something more particular, valuable, and suffice for their needs, so that maybe you can essentially talk them down from what is a more full scope service of an audit to something lesser than that. So if you start talking to your bank and they say, hey, we require an audit, do you want to have that conversation? What do you find valuable? Make sure it's an audit and maybe not some other kind of service that could be more efficient and less costly than the full-blown audit. When preparing for the audit, let's say that you need to get this, what you're looking for is your CPA firm. You want them to know that prior to the audit period finishing, so that maybe they can come in and start doing some prep work for it, not after that period is finished. You don't want to call them in March and say we need an audit for last year. Some of the things in the audit, you like to do some real-time checks with it. It's difficult to do that, when that real time is passed. So you want to know, one of the things you want to know is, am I talking to my CPA? Do they know there's going to be an audit? What should we get prepared for this audit? And you do that before the end of the period that's being audited. The other thing an audit looks at then is, how internally your bookkeeping is. You'd like to have that in order. If you know at some point you're going to need an audit, you might want to start now and say, okay, what should we do in preparing for that audit so we're ready to have a good, clean audit report? And even if it's a couple years down the road, say that at some point you're going to be asking for investors or a larger line, or the bank says, when you get to this size, we're going to prefer an audit. If you know that's coming, you want to start getting ready for it now. It's going to make it much more efficient when that audit time comes. So sometimes you start doing what's called a review service prior to that. Sometimes you start doing just some specified procedures to look at things so that come audit time, that's going to be a much smoother process. So you get in and do some efficient work up front for that. So I think that's what you're looking at. Two things is, make sure your CPA knows prior to the end of the period, and start working with your CPA on what that audit's going to look like and what they need to perform that audit. And then, if it's out in the future, then now's a good time to start planning for it, just to have the conversations and say, are we audit ready? And if we're not audit ready yet, what are some steps we can take internally so that we are audit ready when the time comes?
Right. And, needless to say, we as a CPA firm who do a lot of audits can certainly help both our clients and anybody who's getting ready. So please reach out to us if you have questions about that. Eric, thanks for the overview on how to get ready for the audit process. I think there's a lot more we could talk about there, and maybe we will in future weeks. But let's wrap up for this week. If you found today's episode helpful, please be sure to subscribe on Apple Podcasts, on YouTube, or on Spotify. Check out our website, sva.com, or our landing page at sva.com/OBA for all sorts of industry-specific and economic and tax information. It is prime tax planning time. If you are not working with a tax advisor right now to help plan for what you're going to do for your 2025 taxes, reach out to us and let's make sure we get something scheduled, because now's the time when we can still plan. Come January 1st, it's a lot harder. So we would love to talk to you. Thanks again for listening, everybody. Hope you have a great week, and we will see you next week on the Biz Beat by SVA.
Day. From tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.